Okay, hello everybody, and welcome to Investing with IBD, sponsored by MarketSmith. Today is April 16th, 2020, and we have a special bonus episode of the podcast today. I'm your host, Arusha Paris, and we have Scott O'Neill, CEO of Data Analysis Incorporated, back on the show. Scott, thanks for being here.
Of course. Glad to be here.
For today's bonus episode, we're going to talk about the current market, and then we will talk about this pandemic environment and some of the changes and some of the stocks and trends that could be emerging from this. So let's first talk about the current market, Scott. Now, the last time we spoke was only a couple of weeks ago. It was on April 1st, and of course, things were looking really bad. Then we were in a correction, but of course, the next day, we had a follow-through day on the S&P 500.
Yes, we did.
And then on April 6th, we had a follow-through day on the NASDAQ. And so it goes to show you that very quickly, no matter how bad the news is out there, the markets can change. And it's up to us to listen to the market. So right now, the markets are in an uptrend. And over the last week, especially, leading stocks are acting better. And, you know, maybe it's too early here, but it is starting to feel a little bit more like a bull market. Scott, your thoughts?
Sure. I remember the follow-through really felt pretty weak, and we were suspect. And so our PMs, a few were nibbling, and a few of us kind of sat and watched. I didn't buy anything on that day because a few of the others did a little bit. But when they're weak like that, you really got to be careful, and maybe it's a nibble. And then of course on the 6th, we were all moving in, and we did move in. We were out of the market fully. And so by the 6th, we had some token positions, but we started building meaningfully. Now, as I said in our last time we talked, Arusha, we're no plunging.
Right.
You know, we can get aggressive, but you get aggressive in the right environment and when you have a cushion and all of that. One thing I tell everyone is very clearly, I don't know of any of us that were very comfortable buying stocks, because the last 3 weeks or so, the news has just been terrible, to the point where you want to just hide under the bed, not leave the house.
Exactly.
But
But Scott, isn't that's almost always there when you're in a bear market, right? It's never going to feel good for those first few stocks that you buy after a follow-through day.
Exactly. And you're basically following rules and staying very rigid with the rules, and the rules say you need to start wading in. Then the next question is, well, how fast?
Right.
And that's to each his own. I am kind of surprised that the last 2 weeks have been this strong. We've been consistently wading in, and getting the right responses, and so going deeper. I would say that now it's starting to feel like we're really emerging kind of quick, and I think, well, today's Thursday. I would think either tomorrow or next week we're going to have some down days. And so this is very important, that in this process, we remain very calm and level, and just like a robot, keep wading in. Because if we get a little excited, because I've got a couple of stocks that were up 5%, 5.71%, 4.9%, 4.3%. I mean, this was a pretty good day today. Well, if I start getting excited and start piling in to these stocks, I'm going to mess up my average cost, and that volatility is right around the corner. There is no way we make a bunch of money really fast, and there isn't an issue around the corner. And so let me give you a tangible example of this for your listeners. Maybe you forego the third purchase in Bill's book, Pyramiding In.
Right. So
Uh,
let's first just briefly talk about the pyramid. And we
okay.
will usually, if we're going for a normal position, as it crosses the buy point, we're going to buy half of that position, and then let the stock prove itself. If it goes up another 2%, 2.5%, we'll buy another 30% of that intended full position, and then finally that third purchase that Scott is talking about will complete that position with that last 20%.
Exactly. And so the idea is not let's let we got an uptrend and let's make a bunch of money. The idea is, can I get some toeholds that can get traction that I can slowly build and work with? So it's a different frame of mind. It's a little
Yes.
bit more defensive. Prove to me I should give you more money. And I know that the boogeyman might be around the corner and try to scout me. So I'm not going to get my average cost. I want my average cost as low as possible in these early phases of a possible new uptrend that could become a real bull market.
Yeah, and if it turns to be a real uptrend, a real bull market, the market will keep slowly pulling you in by giving you more and more chances to buy the next batch of stocks that break out.
That's exactly right. And so it really is a patience and observing exercise.
Hmm.
It's all observation and then methodically moving in.
So, Scott, let's go over, for those of you who are new to this, to the podcast, or even to our system, let's go over the follow through day concept. Because this is a really, really important concept. And we already talked about how scary it is to buy as a market is potentially emerging out of a bear market. And so this is why we have this follow through day concept, to give us a signal and to force us to follow rules to start buying something.
Sure. Well, go ahead, walk them. You have the Nasdaq up. Walk them through it.
Yeah, so what we did with the Nasdaq, and I'll use kind of the traditional kind of count here, but we're always looking, so clearly you have a correction here, a bear market, right? We're well in a correction, and all we're doing during that time, we're protecting ourselves, we're staying on the sidelines. We're looking for an up day, and that up day, it's not like we're buying at that, but we're going to start to count, and we keep counting until two things: either we have a very powerful day that we call a fall today that's up more than 1.25% on higher volume than the day before, or the second option is the low of that the downtrend is undercut, and so it continues the downtrend. So we were in this really long downtrend, and then we had a pretty powerful update here, and this was on March 24th, and so we just started counting. We didn't do anything at that point. Okay, so we just started counting, and the earliest you can get one of these powerful follow through days that we'll call a follow through day is on day number 4 and on. So 1, 2, 3, 4, 5, 6, 7, 8, 9. And so on April 7th, on the Nasdaq, we had a fall through day, and of course on the S&P we had a fall through day on April 2nd. But since I have the Nasdaq chart up here, this was a day 10 follow through day that we had here. Now, even then, it still looks really scary, but that's where, when the market, you start seeing that kind of power, that trend change coming in, and you start seeing some leading stocks starting to break out of bases or starting to move back up. That's where you say, okay, I know it's really scary. It might not work, because all these fall through days do not work, but let's put something to work in the market to get that feedback.
Yeah. By the way, it's the April 6th, not 7th.
Oh, that's right. Yeah.
Yeah,
Yes,
and
April 6th.
and
Sorry.
and the idea is that this is the beginning of a new trend potentially, and we want to be there. Now, one thing I'd like to tell everyone is this is exactly why you always have to. You cannot tune out. You have to keep your watch list fresh and keep your eye on the market when the market's in a bear market and it looks terrible, because all of a sudden you blink and it changes direction and then you're caught flat-footed. And where's the most opportunity to make progress made? At the beginning.
Exactly.
And if you catch that trend change, or not if, when you do it once, you will be hooked on this forever. True statement, Arusha?
It's absolutely true.
Yeah, because you get in right at the beginning. And then you have some great positions to build on. And there's a direct correlation between power and distance. The first ones out of the gate usually are your biggest winners of a cycle. That's another issue. So keeping that watch list fresh and not tuning out is a big piece of this.
Yeah, and so the other thing is not assuming like market came in so hard, it's a natural assumption to think that we may go along the bottom for a while. This may take months. When you get that fall through day, treat it with respect, put some money to work, because who knows what could happen. Could it have a V-shaped recovery? Absolutely. The market is going to do what it wants, and it's up to us not to predict, but to interpret and listen to the market.
Yeah, that's an important concept. We're in the interpretation business, not the predicting business. And if you look historically, there aren't a lot of V bottoms. They're
Right.
more rare, um, but they occur, and we want to just play it as it's unfolding. And I'm actually kind of surprised at how quick we have bounced in the last couple weeks.
Right.
Another interesting concept is stock rotation. So I'm looking at my portfolio right now, and it's interesting that there are some new names I've never owned. There are two names. I have 8 stocks. There are two names that I had in the very recent uptrend that were able to reassert themselves. There are some brand new names that I had never owned. And then there's actually a name that was a previous winner that's reasserting itself, which is unusual. Uh, Point being, if you're watching the high relative strength stocks during a weak market, and we just talked, didn't we talk about this, Arusha, on April
Yeah.
1?
Yeah, because that's what we're looking for. This is coming back down to the basics of our system.
And on April 1, when we were talking, I can remember my watch list. All the stocks that are moving had high relative strengths then, before the follow through.
Yep.
So, as my dad would say, you're either there or you're not.
It's very true, and it's amazing sometimes how you can do well in one cycle, but then you may struggle in another cycle because you haven't caught on to the new rotation of stocks.
See, that's it. That's a huge one. And I'll give everyone a great example. So the last uptrend, we had a lot of help me, Arusha. It was the HR software stocks. So
That's right. Yes, the
Paycom,
Paycom was the
the
big one. Right?
ServiceNow, the Workday.
Yep.
We had a bunch of those. Look at Paycom, got whacked today,
Yep.
almost 9%. So it sometimes a portfolio manager can have a hard time adjusting from one cycle to the next, because the Paycom is still a great company and the ServiceNow is still a great company, but the stock is not going, it may not work, and others are working. And so we have to have that ability to disconnect mentally from a group that did well for us prior, and we think will continue, but you don't know what, meanwhile there are other stocks going. That's a great point you bring up, Arusha, on the
Yeah, I
rotation.
mean, Square was another example of yeah, it was starting to go. Obviously, they have a really interesting business and story, but you know what? The market's not going to treat it well right now, and you just stay out of it, keep it on your watch list, and let it set up down the line if it's ready to go again.
So that's interesting you bring up the Square. So we have a PM that absolutely nailed that stock through 2017 and 18. And so jump into that person's sneakers for a second and think about, all right, you sold it, you've closed out the position, but then all of a sudden it starts to look interesting again. What are the odds that you're going to go back to it, right? And
Yeah.
probably pretty large.
Yep.
So I would ask the listeners to pull up the square on a weekly chart. In fact, can we do that? Oh, you
Yeah,
got
yeah,
it.
I'll pull it up on the weekly right now.
On a weekly, okay, and you see this absolutely model book move.
Right.
Gotta love it. And then look at from what is that, third quarter 2018 all the way to current.
Yep.
And so if you're going back to the well because you nailed it before, what's happening to you,
Oh,
right?
yeah, you're getting frustrated, you're taking losses, and
Yeah,
you're losing your confidence. And that's the biggest part of this whole game, right, Scott? It's
yeah.
just that confidence. And it's funny, it's not only just momentum in stocks, it's momentum in your confidence, and just buying those little positions early on can help, but also having an open mind to new ideas and letting go of some of those other great ideas that you might have done well in the past is just as important.
So let me add a little bow on this package. So we know statistically that most model book stocks have one move, one big move, and then they're not able to reassert themselves. Now, the square is apparently crushing it on the fundamental side in the marketplace and what they're doing. They're really doing well. But
Mhm.
that stock chart is saying that no, this is a one move model book stock, and it was great while it lasted. But if you keep going back to the well, they're going to slowly chip away at you.
That's interesting. So the market is back in an uptrend. Leading stocks are starting to act well again, and hopefully your portfolio is increasing a little bit. Coming up next, Scott and I are going to talk about psychology. Stay tuned. I am here with Scott St. Clair. Scott's one of our senior product coaches at MarketSmith. Now, Scott, there are a ton of publicly traded stocks just on the U.S. I think it's over 5,000 stocks. Who has the time to go through all of these stocks and find the very best ones?
Yeah, most people don't, right? So what you need is a tool like MarketSmith. We have decades of research on what makes a great winning stock. So we've done all the research for you. So we're going to try to highlight those specific stocks with those great data points. So if you're looking for that next great potential big winner, orange stock ideas button, you just click on it and you've got some of the main reports that we use, including the Growth 250.
Yeah, and the Growth 250 is the first list that I go through on the weekends.
Yeah, it's the most popular one, but there are others. There's the Breaking Out Today, Stocks Near a Pivot, and then the Blue Dot list, right, which is very popular. It's going to show you the stocks with the best relative strength. So we've done a lot of the work for you. What you have to do is review these lists. You're going to come up with some of the best ideas in that current market environment.
Perfect. MarketSmith saves you time and makes investment research that much easier. For more information, go to investors.com/podcast2020. Scott O'Neill is our guest on Investing with IBD, sponsored by MarketSmith. Okay, Scott, let's talk about psychology. And it's not just necessarily the psychology of the trader. Let's just talk about psychology of everyone in the U.S., in the world right now, and with the bad news that's out there, and how easy it is to just let that pessimism get to you.
Yeah, it is a little weird. I walk in my neighborhood once in a while and there's someone coming the other way and they immediately cross the street when they see me. And I think everyone has had that happen. And then a couple of days ago, I went into a grocery store just to kind of do it. And I had to have a mask and gloves and people didn't want to be near each other. And it is different.
Yeah. I mean, the waiting outside in lines to go into the store, right? It's pretty remarkable how in just 1 month everything has changed. And so let's talk about maybe the potential impact that this lockdown could have both on business and society.
Oh yeah, to me, I think this is going to have a profound impact on society and business. For instance, I think employers, the ones that are able to survive this at this point, have a lot of their employees at home. And are they productive? And what are the tools they're using? And so here's this crop of ideas, stock ideas, right in front of us being presented from a fundamental standpoint. I think, Arusha, you were talking earlier offline about exercising at home.
That's right. Yeah.
And that kind of thing. That makes sense. For me, I've been checking with our managers because we have multiple divisions here at DAI. And my first question is, how are your people, and do they have the tools they need, and how's your productivity? And because we're basically an IT company in many respects, we have a very strong network. For instance, our network is experiencing 400% increase in traffic right now because everyone's at home.
Yep.
And so what are the tools that our network people used to be able to scale up and all of that? But I do think it's interesting. For instance, I would not want to be in the commercial real estate business. You saw the trend away from malls and what Amazon, how it's impacted malls. Well, now what about office space?
Yeah.
And for instance, we have offices all around this country and in China and India. And you start thinking, well, do I really need an office in this state? Maybe I could have them work at home. And so I think this is actually going to have a profound impact. Another interesting impact is we have a highly automated digital printing company that primarily serves the healthcare industry. But there is a component that's ink on paper, and we've modeled out when gradually people will get their statements and correspondence via digital versus ink on paper, and projecting out, because we have to buy equipment and presses and all of that. And we don't want to own a whole bunch of that when finally the lights go out, right?
Right.
On paper. Well, I'm starting to realize that I think this is going to accelerate that process of sunsetting more and more ink on paper. For instance, everyone listening, you get your bank statement and they always say, do you want to go paperless, right? They're constantly beating you on the head, or your medical statements, go paperless. So I think that trend may accelerate a little bit. And of course, a couple of our printing competitors, stocks that are primarily on the ink on paper side, look terrible, right? Anyway, so I agree with you, Arusha. I think there's going to be a profound impact that will play itself out over the next decade.
Yeah, Scott, let's talk about a little bit about the productivity, because I'm sure you've heard it, and we've definitely felt it here at IBD, at MarketSmith. We're all working from home right now. We're using all these tools, and I feel like we've all become even more productive. We're already a pretty well-oiled machine before when we were in the office. I feel like we've taken another level up. It's pretty remarkable at how efficient we've become just by using a lot of these online tools.
I completely agree. I was definitely in this area old school. I did not like people working at home, and you're at home and your spouse sees you and you get asked a couple of errands and all of that. Well, and yeah, I'm cut of that cloth thinking back, but
right.
In looking at our operation, and we have about maybe 600 people that are maybe 700 in around there that are working out of their home. So this is not a small operation.
Yeah.
And I agree with you, Arusha. Actually, without the distractions in the office and the drop-in meetings and everything, we're highly productive and our people are doing great across the board. And so I go back to, okay, well, are there any investable ideas in there? Well, what are the tools they're using? And you can start, not that Cisco's probably I haven't even looked at it in a decade at least.
Well, let me pull it up just while we're at it.
But we're on a very large, code for expensive as hell, Cisco switch, right? And then there's a second switch because they got to be redundant and backup and all that stuff. But then you work from Cisco onto the next piece of the whole, how the network's put together, that whole puzzle. And then you've got cybersecurity in there.
Yep.
Oh, that brings up an interesting point. Never forget, as an investor, don't ever forget your primary motivators, right? Fear,
Mm-hmm.
okay, greed.
Yep.
Well, on the fear side, cybersecurity, safety, right? That's a major theme, and you'll always see a cybersecurity stock or something along the lines of security that can be an interesting idea. Um, anyway, yeah, Cisco
Yeah,
looked
and one
terrible.
and just to give one idea to the listeners out here, one of the tools that we're using is Slack. A lot of developers, a lot of IT companies are using this, and we've been using it a ton since we've been working at home. So I'll talk to the product managers and tell them what we need from the business side, and we'll instantly do screen shares. We'll instantly call a number of people all on Slack. We don't have to look up people's phone numbers. You can just pull them up in the directory and just include them in conference calls very quickly. We can draw on the screens and all. It's incredibly productive. And so now this stock, it's not necessarily ready to go right now, but this is what you want to do. You want to put it on your watch list, let it set up, let it build a pattern, and then you could manage your risk and enter it if it looks right to you. So you always want to kind of do this, kind of what Scott is talking about. Look for these ideas and look how some of these larger changes are going to impact the stocks and the business world. Now, Scott, let's go into, because you mentioned earlier, we had this really strong run in the market, which created a lot of right-hand sides of bases. But there's one problem though, right? Because it was such a strong move over the last 2 weeks. A number of these stocks broke out without handles. What are your thoughts about that?
Yeah. Now, I don't know about the listeners, but I do not like cups with no handles. There clearly your risk is higher and my batting average is lower. It just is. The other thing I would, this is a good one you brought up, Irusha. The other thing I would be careful on is when you're looking at a weekly chart and you're looking at a cup and it's kind of hard to find a handle, and then you go over to the daily and you see this handle, be careful. You want to, the purpose of a handle is to get those last few negative Nellies out of the stock. And so it takes a little bit of time. And you don't want a super volatile handle. You want a tight handle. So it tells you, yeah, there's only a few of these and they're getting off, but we're working them out kind of thing. So I tend to like a handle that's pretty clean and visible on the weekly. So that's one. Now, I'm not saying it's an either or thing. I'm saying your their risk profile, in my opinion, is different if you have a clean handle on a weekly chart versus one that's a lot quicker and shorter in duration on a daily chart. Point one. Now, point two is there's a lot of stocks that are really kind of straight up from the bottom, and you don't have the handle. And so the way you look at it is just draw a line on the chart. Where's that bottom and where am I now and what percent am I up? And you got to be careful, when stocks start getting 15, 18, 20, I mean, even 25, they're going to come in. It is the odds of it continuing is, I mean, what do you think, Arusha? I think it's very low odds to continue. It's going to come in while
Right.
you're getting excited and buying more and more and more, and then bam.
Yeah, and I've learned that the hard way many times. It's amazing what the psychology can do to you. If a stock just keeps going up, after a short amount of time, all you think of it keeps going up. But you have to. That's why we use the charts to give us an idea. Hey, this stock has gone up way too fast. Let me hold off. And that actually even happened for some of the first stocks that jumped out of the gate a couple of weeks ago. They shot up and then they came in pretty hard. And then they give you another chance. If you were disciplined, you got another chance to buy at a lower risk entry. So you always want to keep that in mind. If you feel those emotions getting to you and you start feeling that you're missing out, be very careful because you're not the only one, and usually a little shakeout is around the corner.
Yeah, this is actually a refinement in your process. Be be very mindful of what Urusha just said, going up too fast. And these last 2 weeks, I'm starting to feel that a little bit.
Yeah.
Um, Now I have not I did not buy anything today. I nibble. What's today? Thursday. I didn't buy anything yesterday, and I was nibbling earlier in the week a little bit, and that's it because I do expect things to come in, and it's not that I want to buy cheaper, it's that I want to try to hold on to what I got and
Yes.
see if it can truly work, right? I'm only in for 2 weeks now. But when like I had quoted today, up 5 and 4 and 3%. I mean, that's unusual. And then yesterday we were up, right?
Yep.
This morning we were up and the indexes were down. And so I know we've got the right stocks. It's just now we're kind of going up a little quick.
Absolutely. So you definitely want to keep that in mind. Now, Scott, the last topic that we wanted to talk today, because it's there's just so much bad news out there, is let's just go over some things to keep to maintain an optimistic mindset, because there are a lot of great things that are going on that's been easy to forget over the last month.
Oh, so I turned on the news last night and the night before, and man, that was a mistake, especially last night. Now it looks like the virus came from the lab in Wuhan, and now the world is going to descend upon China, and we're going to get into. I mean, we're already in trade wars with them, kind
Right.
of, and now we're going to fight with them about. So, and then some of the quote medical experts, and it's going to take a couple of years to eradicate it. And then there's the mentality out there, well, let's keep everything shut down until we get rid of the virus fully, which would be nice. But then the American economy would implode. And what would ensue from that would just be unprecedented, at least for a century, I think. Yeah. And so it was so negative. I just slithered to bed, right?
It's true.
And so, I don't think I'm a blind optimist. I recognize these problems. I first know what Arusha you said is absolutely correct. Do not use the news and the media to help you with stock transactions. You'll get burned. But also, I kind of fall back on, do you believe in America? Do you believe in our exceptionalism? Do you believe that we've got the best medical system in the world, and that we will solve this, and that we've got, not just our country, but all the countries are laser on this issue to come up with a vaccine? And I really believe that we're going to come up with a vaccine. And I'll put it out there a little bit, my neck. I think that we may have a vaccine by the end of this year, when everyone is saying, oh, it's in the middle of next year, and all these problems will linger. That's one. There's another thing, and I definitely don't want to get political here. Like Trump or not, okay, the guy is a businessman. He's not a politician. He pretty much proved that the first couple of years.
Right.
Okay. But he understands business and the economy. And if I'm in his shoes, I'm really nervous, because every day that we're locked down is having a profound impact on small businesses. And before I forget, everyone listening, please think about it in this context. These small restaurants and these small gas stations, and they're going out of business. And when the economy turns, they're not going to be able to employ people, because they're going to be out of business, and we have to support them now.
Right.
We have to buy food from restaurants. We don't have to go inside. Okay, we can pick it up or have it delivered, but we've got to support these businesses right now. in our local areas. So I really push that out to everyone. But back to it, he's got a real dilemma, and it's a no-win. You try to open the economy, but you've still got this virus around. And as he opens the economy, the virus is probably going to pick up some. But we have to look now at two negatives, and which is worse. And so, of course, to compound the problem, the Democrats will attack him. Oh, he doesn't care about people, and all he cares about is making money. And so that is going to get played up. And the reason I'm playing this out for everyone is this is going to feed into volatility of the stock market. So another reason why do not chase. Keep your average cost low. Resist adding to that good position you have until you really have a clean, low risk additional entry point. Okay, because there's going to be volatility to the end of the year, I believe. But the stock market, if this holds for a few more weeks and really does become a real new uptrend, it's telling you that it believes in America also, and it believes that we'll get through this, that some of the earnings that are starting to come out that are going to be bad are factored in. And so I would recommend turning off the TV. If you need news, Google News or something. Try to filter very heavily what gets into your head right now. You know, I go home and I hear about another friend that had to close his business. I talked to my pool man, and his whole family's been laid off, and it is bad. Yeah. But the stock market is looking at it through its lens, and as Arusha said, we're interpreting and we are accumulating stock.
And one other key point is the stock market is always looking out ahead. It's always looking out 6 to 9 months ahead. So it's not focusing on the bad news now. It's betting that we are going to pull out of this. We're going to recover, and the economy is going to recover, and things are going to eventually get back to normal. But it's really betting on the resiliency of America.
I think so. And when we talked last on April 1st, we had just come up off the bottom just a little bit. And what did we drop from peak to trough on the NASDAQ?
I don't have that right off here, but it was probably close to 30% or so.
I thought it was 31. You know, and it happened at the blink of an eye. And,
right.
and so it does get scary, but that's why we follow rules, because you get out of the market as something like that starts. And then when it appears to be done and it's trying to start a new uptrend, and you get the right signal, you're moving back in. Thus, you sidestep that. Let's say that 30% drop was like a 50% drop, like we had in 08.
Yep.
Right? Where you blink and man, it's coming down really hard. So we follow these rules of accumulation and distribution to help us time the market. And remember, 3 out of 4 stocks follow the trend of the market. So it's a significant factor that we really do have to master. And, you know, our markets team is excellent at it. We talked about that last time. They've spent decades, you know, with Bill O'Neill critiquing them every night. How would you like to be that editorial
That's a pretty tough job
guy, right? Hey, Arusha, hey, I want to talk about this. So, but I would finish up with, for some reason, I am still optimistic. Yes, it's going to be difficult, but I have a funny feeling we'll end the year okay to probably pretty good, somewhere in there. Now, that's really a prediction, and it's really worth nothing. All right, it's meaningless. That's just kind of my sentiment. Or maybe because the last 2 weeks we've done really well, I'm a little more bullish. I'm not sure. What I do know is that if this market comes apart, we will back away. And if it continues going up in a sound, steady manner, we will add the positions and add new positions and get in deeper.
Excellent. Great advice, Scott. That's it for this bonus episode of Investing with IBD, sponsored by MarketSmith. Thanks, Scott, for joining us today.
Good luck, everyone. Hang in there.
So that's it. I'm Arusha Pierce, and thanks for listening.